Hey everyone, hope you all are having a great weekend. Today is Sunday, July 19th. Markets are closed, and in this video, I just want to go over how I ended this week and go over the options and stocks that I currently have in my portfolio. As you guys can see, based off of the last video, I do have a lot of options that have expired. So the list here is pretty cleared, and also a little hint, there's two stocks here that are not in my portfolio anymore, and we will be going over that in today's video as well. So this past week, it was a pretty choppy week. Tech was hit pretty hard. So just to start off, you guys can see I do have two options that are still open, and that is one with the MGM call for $21 strike price, and that will expire this Friday, and I'm planning to hold on to those. And also MFA, which is much further out, October 16th for $3 strike price, and that's a cash secured put that I have 3 contracts open, and I will be continuing to hold on to that as well. I will go over the 2 shares that I no longer am holding, and the first one, if you guys can tell by now, is Toll Brothers. And with Toll Brothers, you guys can see that I had a cash secured put back in June 12th that I did get assigned at the $34 strike price, so my average cost was $34. And throughout the weeks, I have been selling covered calls, and just recently I do also have a dividend pending, which I held the stock through the ex-dividend date, which is pretty nice. And as you guys can see, I ended up selling my shares for $36. So that's about a $200 profit right there. And you guys can see that I ended up buying back my contract that I had sold earlier, actually 2 weeks ago. And the reason for that was I was planning to buy back my contract so that I can sell at the $36 price. Toll Brothers was during this time around $36.50, and it started to fall. Purchased back my contract for $145 to close the covered call, and ended up selling as the stock was falling in price for about $36. So I did still end up in the green. If I was waiting and just getting my shares called away at my $34.50 strike price, I would have made about $95, so $50 from the stock appreciation and the $45 from the premium. But I ended up selling it for $36 a share, and I ended negative $100 because I had to pay $145 minus the $45 that I had initially got. So that's about $100 hit, but I did make $200 off the appreciation, so I ended up making an extra $5 from that move. The second stock was Wynn, and with Wynn, I actually had my shares called away. I let the contract expire, and Wynn ended Friday at about $83, and so I had my shares called away at the $81 strike price. I had a $65 average cost, so going back down my history for Wynn, you guys can see that I started purchasing Wynn back in March, and Wynn was pretty low in the 50s, 60s. I even grabbed some shares back when it was about $48 in April, and I slowly just averaging down my cost basis for Wynn. And back in back on June 29th, you guys can see I bought 59 shares. And this is why I strongly urge you guys to always try to acquire 100 shares of a stock so you guys can sell covered calls on it and continue to generate income while you're holding your shares. So I bought 59 shares because I had about 41 shares of Wynn. So I wanted to get that up to 100 shares so I can sell covered calls. And you guys can see that since I bought those additional shares, I have been selling covered calls. You guys can see my recent contract here was actually a cash secure put that I did with Wynn, which I do wish I held on because this would have expired worthless. Since Wynn is at about $83 now, I would have made a full $180, but this was a quick day trade that I did, and at least I made $40, so I can't complain there. And I did get my shares called away, like I said, so I made about $1,700 with this play with Wynn. So going back to my portfolio, I did have covered call with Microsoft, and with Microsoft, my $210, which was the recent covered call contract that I sold, expired worthless. Microsoft closed the week at around $203 a share, so that expired worthless. MFA, I did have a covered call on MFA at the $5 strike price. MFA has been hovering around the mid $2.50 share price. So that got expired, and that was one of the covered calls I showed you guys in my first video that I made about $1,225, which was a really nice premium from MFA. And I had also 5 cash secured puts, 5 contracts, and those also expired worthless. Uber, I did also have a covered call with Uber, and that also expired worthless. And with Wells Fargo, I had a covered call, and that expired worthless as well. AT&T, I also had a covered call, and I also have a dividend pending with AT&T, $52. Very nice dividend there. And with AT&T, on Friday, I actually bought back my contract. So I paid $1 to buy back, made $6, and I was planning to sell a covered call for the following week, so next Friday, and it never went through. So I guess the volume wasn't there and the open interest for the contract for the $32 strike price. And that's one thing that you guys should always keep in mind is whenever you wanted to sell or buy options for a stock, I would definitely look at the options chain and look at the volume, and just look at the volume for the stock in general and make sure that the volume and open interest is high. Also had a covered call with Starbucks, and that also expired worthless. As you guys can see here, I made about $20. And lastly, American Airline covered call, and that also expired worthless. I made $5 on that. Wasn't much, but at least I was able to make something while continuing to hold American Airlines. What I'm looking for this coming week is Microsoft actually has earnings coming up, I believe on Wednesday. I'm looking to sell a cover call on Microsoft this week. Most likely going to wait until the earnings or maybe a day before the earnings. I do have a feeling they're going to beat their earnings. Microsoft is a great company, and their 5-year, they've been consistently going up. They have a really nice 5-year graph. Obviously, we had the crash back in March. I'm going to be waiting on earnings to see how I'm going to play Microsoft. Because if Microsoft starts to shoot up after earnings, then I'm going to get a lot more premium. So that's why I'm just going to wait closer to earnings. So maybe mid-week I'll sell a covered call and at a higher strike price so I can get more premium too. Next play I'm gonna do is with MFA. I actually have 5,200 shares of MFA. And MFA just recently, they introduced a September expiration. So they do have a expiration in September, and they also included 50-cent price increments, strike prices. So they have the $2.50, the $1.50, the $3.50, and so on. I'm looking at the $3.50 strike price, and with the expiration of September 18th, the premium's not bad. It's 15 cents. The only thing is that the open interest and the volume is not that great. The implied volatility is really good, but if MFA starts to make some moves and dramatically increase in price, then I'm gonna continue just keeping an eye on the option chain for MFA, and hopefully I can get it in at $3.50 or a $4 strike price for a September 18th expiration. Like I showed you guys, I did have my Wynn shares called away, but I do plan on getting back into Wynn. I actually think that Wynn is a great stock to sell options with. So I'm gonna see if I can get a cash secured put at the $81 strike price or possibly lower, depending on how the stock is moving this week. If we can stay in the low $80 level, then I will plan to sell a cash secured put on Wynn. And going to Wynn right now, I can show you guys the option chains for this coming Friday. You can see that with the, right now the premiums are really high, so hopefully the prices stay this way on Monday. I'm expecting it to fall a little bit. If I can get in at the $81 or $80 strike price, $80 strike price right now, you're getting about $2.65 of premium, which is very nice for having $8,000 in collateral held until Friday. If I show you guys the percentage, so let's do 265 divided by 8,000. So that's about a 3.3% gain on your collateral, which is really nice. Anything above 0.5% is very good in terms of a premium, and that's only for 1 week. All right, and next, I do also plan to sell covered calls on the remainder of the stocks that I have in my portfolio. I would really like to get my shares called away at even my cost basis for American Airlines and Starbucks. Also AT&T. I know AT&T gives good dividends, but the premiums are not that good, and I'm in it for the premiums because the dividends are only paid every quarter, and the volatility and movement of the stock is not that much, so that's why the premiums are low. And I'd rather get into a stock that I can expect to not only gain a lot in equity but also in premiums, because AT&T at their highs, they were only around a $38 stock. So even if I hope for the markets to get back, if we get good news on a vaccine, AT&T is probably going to get back to these levels, and that's not much of a gain, and my money is probably put to better use in another stock that I can at least 2x or 3x my money. So that's why I want to get out of AT&T as well. And other than that, that's all I had for you guys in this video. Just wanted to give you an update on how I ended the week and what I plan to do for the following week. I will definitely keep you guys updated and posted on what I do, options I plan to trade, and if I purchase any new stocks for a swing trade as well. I hope you guys enjoy the rest of your weekend, and I will see you guys in the next video. Thank you.